So the apes are back, chanting YOLO louder than ever, and this time, will GameStop actually go to the moon? It's a big question on everyone's lips, and looking at Reddit and Twitter, a lot of people think that it will break its recent January highs and, well, go to the moon. Some estimations saying it's going to go all the way up to $1,000 a share. And given GameStop is finally running again, I thought it's a perfect opportunity to give you my thoughts on why you should or should not be buying GameStop at this current price. And the only way to do that is to grab your phone, speed dial your loved one, tell them you love them, and tell them that your downstairs mix-up is looking very, very purple, and it gets even worse. GameStop is about to get its second STI. So yes, a slightly different setup, and you might notice I'm actually wearing a hoodie, a BTFD hoodie, a buy the fucking dip hoodie. Thanks Jordan in the chat room for making this merch. If you want to go check it out, there's a Teespring store down in the description. I might even put it on the pinned comment. Hey, I'm feeling kinky. But I must tell you, this hoodie is damn warm, so I'm probably going to take it off any second during this video. But rest assured, it's the only item of clothing going off. And as always, the very boring disclaimers, this is not financial advice and should be taken as entertainment purposes. Do your own due diligence when it comes to making any investment decision. I'm just a good-looking guy with a beard on YouTube. Please do me the kindest of kind favors by making sure that like button is turned blue. I'm sure there's going to be a lot of angry apes hitting that dislike button, so help the team out. Make that like button turn blue. Subscribe, turn on the bell. If you want to support the channel, there's a Patreon link down in the description where you can join me live on the WhatsApp group. And if you want to go one step further, join eTORO on the pinned comment, sign up, deposit, make one simple trade, and check out the comment on how to get free, yes, free, lifetime access to the LWT investing chat room. I'm taking this off already, it's damn hot. Now, if you've been living under a rock or joined some extremist caliphate, you might have missed GameStop running over the last couple of months. January went absolutely nuts on the news that there is a huge over shortage and that hedge funds are basically in a lot of pain, and this Reddit group pumped the stock to the moon. Well, it's close to the moon. In fact, it went up quite a hell of a lot, as you can see from these slides. But since then, companies like Robinhood and 212 had to suspend trading because they didn't have enough funds. There's a lot of conspiracies out there, like Robinhood is actually owned by lizard people, but that is the reality of the situation. And since then, hedge funds actually cashed out. The short interest has fell from way over 100% to pretty much around about 30% on rough estimations, and that short squeeze potential is pretty much no longer existent, which I'll come on to in just a second. In more recent times, GameStop has said it's going to push more to the e-commerce side and has started the process to do so. This news alone helped push the stock up to recent new highs, and it's continuing to drive forward. But it's not all great news. On Wednesday, the range of Wednesday alone was 50%. 50, not 15, 50. The stock went all the way up, halted, and then fell, well, all the way down 50%. And that trapped a lot of chasers and brand new traders, and, well, rest in peace. Now, as mentioned, when GameStop stock had its first run up, GameStop stock is quite a hard thing to say, had its initial run up, it had a short interest of way over 100%. So it was quite easy to manipulate to the upside because majority of the shares were actually borrowed on and not available in a liquid market. But since then, the hedges have covered their position, and that short interest is currently around about 27% if you go on MarketWatch's website. In fact, if you go onto MarketWatch's website, they have a little algorithm there that tells you on the likelihood of a short squeeze happening. They used to price this at 5.7 before the initial pop, and, well, now it's not really anything to mention at all, currently riding at 0.4. So it's gone from 5.7 to 0.4. That's not good if you're looking for a short squeeze. Now, why is the recent run-up actually bad news? Well, volatility is a good thing if you know how to control it. And unfortunately, people are still buying GameStop at this current price. And I know it's not going to be the popular opinion, but I've got to voice my honest opinion. And if you are buying it, I just want you to have a solid risk management and make sure you don't lose the farm. I put a video out way back when, before the crash actually happened on GameStop, over the weekend, and everybody gave me a lot of hate, saying, ape hands, diamond hands, YOLO, you don't know what you're talking about, this guy's an idiot. Monday opened, and, well, they all lost a hell of a lot of money. A lot of them probably still held because they went with the mentality, I'm down 70%, I might as well lose it all, which is crazy because why can you ever be in a position that's down 70%? Especially on a company that was near bankruptcy. Now, genuinely, I am quite worried that history is repeating itself, and I want people to be very, very careful, especially if you're a new investor and you don't know much about fundamentals. But if we look at the chart, there is actually some good news for the bull case. When it actually fell on Wednesday, it got bought up very, very quickly and is now consolidating over the last few days, while still trading quite good volume. So you could see a push to the upside to continue as the share float rotates out. But you could also see a pull to the downside when that channel does break. In my opinion, it's a complete coin toss. Now, looking on Twitter and Reddit and even on YouTube, a lot of people are saying that this could become another giant in the e-commerce space and more importantly in the gaming space specifically. But that's the key word, could. It might not, it could not, it could or it could not. We don't really know. It's a complete gamble. What we do know is they're raising quite a bit of debt and they want to move to a new business model completely. And how are they going to do that? They're going to need to raise capital, and I hate to tell you this, but the way companies tend to raise capital is by doing offerings and dilution. I have no doubt in my mind that at some point in the future, GameStop will dilute, they will add shares to their floor, and it's going to be a bloodbath to the downside. Cause in there with panic and short sellers coming back, I just don't want people to get burned, especially new people who are just starting their investing journey. So if we put it on paper, it's not profitable. In fact, it's very far from profitability. It needs to be completely restructured as a company, which is very, very expensive, not to mention finding the right people to help restructure the company. And worse, it's the exact definition right now of a hype and hope stock. I think a lot of people are buying this in the hope to make 100, 200, 300%, and people who bought it at the bottom, well, yeah, congratulations. The point of this video is don't be buying here or opening a position. If you've got a good entry, maybe you add on dips, but that's really it. Do you really think this company is currently valued at that much? And I know stocks are forward looking, so put down your keyboard and listen to what I've got to say. For GameStop to justify its valuation that it's currently at, it's going to need to raise a lot of capital and more importantly restructure a hell of a lot of stuff. And they just can't afford it. They're going to have to raise cash somewhere and you're going to be a bag holder. And I know it's not what you want to hear and I'm sorry, but I've seen this time and time again in the stock market. I called it last time and I'm going to call it again. Be very, very careful if you're looking at buying GameStop, and if you're already in it and you don't know what to do, don't be afraid to lock in some profits. Now, I want you to make your own decision when it comes to buying or even selling GameStop, but I'm going to leave you with this little article that I found on Motley Fool. GameStop is currently trading at 3 times its sales, 52 times its book value, 40 times its cash on hand, 119 times, that's right, 119 times its free cash flow. And given these statistics into account, it just can't be classed as a value stock, or a value buy for that matter, which is bringing to my conclusion, hype and hope. The final nail in the coffin comes from Motley Fool, and I can't think of a better way to put it. They say, although GameStop is a business that can win, its stock cannot. Not yet. Serious investors should wait for gravity to naturally pull this stock down to a relative buy level. And I cannot agree more with whoever wrote this article. GameStop is seriously overvalued, and I know this video is going to get a lot of hate, but I really just want to reach just one person and tell them to be careful. So please do make sure you have hit that like button. It massively helps me out if you've made this far. Just please be careful when it comes to this ticker. If you're looking for the code word in this video, it's going to be soft feet, the opposite of diamond hands, I guess. Thanks very much for making it this far in the video. Please be very, very safe, and I'll see you in the next one. Take care. Peace.